Hey guys, my name is Matthew Spazziti here with New Millennium Wealth, and welcome back to the channel. Hope you guys are having a great day today, and welcome back to the 5th episode of my weekly market analysis. So today I was able to find 3 different currency pairs, and you may be viewing this episode a day late or so. So I really do apologize, guys. A lot of times I don't have time to just post the video the day that I actually record it. There's a lot of editing that goes in there, and admittedly, I'm very slow when it comes to video editing, but there's a lot of other content that I'm producing, a lot of other things that I'm doing in the background, along with my back testing, and it's just very difficult for me to be able to get the video out until the next day, usually until the next day or later that evening. So I do apologize for that. I'm going to try to get better about that, but most of the time, if I create a video, it's more than likely going to take me later on till that evening at the soonest time in order to, go ahead and post the video on YouTube. So I do apologize for that, but unfortunately, the way my schedule is worked right now, it's just somewhat unavoidable. That being said, let's go ahead and jump into the 3 different currency pairs that we're looking at today. We are going to be looking at the New Zealand yen, the EURCAD, and the EURAUD. Again, like all the trades that I'm looking at, it's always on the 60-minute chart, and I don't really take trades on the daily or the weekly or even the 4-hour or anything of the sort, primarily just because this strategy isn't really set up to be that long time. I mean, it probably would function just as well. It probably wouldn't be a bad thing, but right now I'm interested in more day trading / swing trading, and I don't know, I do use those higher time frames to get a more bird's eye view of the market. I know you guys have heard me talk about that before. It's always important to get a bird's eye view of the market. Always zoom out and see if you can determine what's actually going on in the market before you go off and take a trade. So anyways, let's go ahead and jump into the New Zealand yen. So New Zealand yen made new higher highs right here and broke the structure level here at 72.93 and has since then been retracing back into the 618 retracement level. We had a very nice big long candlestick wick here from this bearish candlestick and ultimately have made new higher highs as a result of it. Unfortunately though, I'm not entirely sure if this is really going to continue lower or going to continue higher. In fact, when I zoom out to the daily chart, it looks a lot like this is going to be more bullish. As you can see here, there's quite a bit of support that the market is coming into. And in the end, when we zoom out to the weekly chart, honestly, I mean, we did make a new lower low, lower close here, and overall, and we also tried to retest these highs. We never really got all the way up here, and then we got rejected right away. Now, yes, this could very well continue to rally higher and make new highs all the way up here. That could absolutely happen, but there's no guarantee of that. And currently, we made a new lower low, lower close down here, and that tends to lead me to believe that this is going to continue bearish. This is going to continue to be bearish. But right now, aside from the higher high, higher close and everything, the market's just kind of been going sideways. So it's very difficult to tell where exactly this is going long term. What I see right now is that we were up here. Actually, let's go out to the daily once more. What I see right now is that we were bullish all the way back in January 2009. And in December of 2014, we have been bearish, okay? So in 2009, we were bullish, we came all the way up here, and then in 2014, we switched to a bearish trend. And now we've had this little pop here, this little retracement, and then we kind of are starting to go downwards. So short term, we may actually be bearish. Like I said, we're coming up against a lot of support down here, a very strong support level. And let me show you guys this one more time. One of the reasons I say this is very strong support levels because of these very big candlestick wicks that are off of these bearish candlesticks. And we have 2 very, very large wicks here, which is typically an indicator the way that it is here, because the wicks are on the bottom and everything, it's typically a bullish indicator. And it really is. And right here, you could definitely see it was very bullish, and we went bullish from 2016 to 2017. So almost for an entire year here, we were actually bullish, all based off of this one candlestick reading. Now here, though, we were almost equally large. We had an almost equally large candlestick, and yet we still never really quite got up nearly as high as we did here, but we did have a very nice rally. So all in all, I think that there are multiple ways that we can look at this. I do see, sorry, I know I'm jumping back and forth between time frames. I do see a possibility here for a potential 618 retracement all the way back up here into the 7560s. I do see that possibility, and that's kind of what I'm thinking with regards to my bullish trading opportunity here. We also made new higher highs here on the hourly chart, so I'm kind of thinking that we may actually come up and maybe come up a little higher here, but that may not happen at all, and this could simply just be a complex pullback as such. Let me show you guys this real quick. For those of you guys who don't know what a complex pullback is, go back and watch my previous videos. We actually did an episode, or I did an episode on a complex pullback, and basically it's just a two drives or a two-wave retracement inside of an overarching trend. So right here we have a bearish trend, and we have a very large two-wave, two-extension retracement in that trend going in the opposite direction. Now, this does not mean that this is a reversal. This could be a reversal. However, if it is a complex pullback, then the market will do two drive, two extension, two waves, whatever you want to call it, two extensions, and then it will roll over. Now, sometimes you can have a three extension complex pullback as well. At least I think you can. I'm pretty sure I know you can have a two drives complex pullback. Whether or not you can have three, I'm pretty sure you can have three. I think there is, however, a limit to it. But I think you can have a three drives complex pullback. I'll have to go back and research that a little bit. But either way, guys, this could just be a very long retracement that's going to continue on being bearish, and it could end up stopping me out. We do have an oversold condition here on the RSI, and the oversold condition has gone to 11.01, so it's a pretty big oversold condition. So, I mean, there is a chance. There is a chance that this could continue lower, continue to roll over, make new lower closes below this 70.26 point, or it could be what I'm thinking, where it could rally for a bit higher retracement and then roll over. Odds are, no one's got a crystal ball, and yeah, so we're just going to have to wait and see what happens. All right, so the next one, I believe, was EURCAD, right? Yep, EURCAD. Now, this one is particularly interesting. We actually had a trade on here a couple of weeks ago, and it ended up making us hypothetical money. We took the trade all the way back here, where I measured my Fibonacci retracement tool from the highs up here all the way down to the lows down here. And we got short, right here around 147.09, and which we got short right around this point. And unfortunately, it kind of played around our entry point a few times, and it didn't really give us an answer right away. But eventually, we had this double top, retest twice. It retested once, came down a little bit, retested again, and then we finally rolled over, making us some hypothetical profits. Now, what it's doing, when it did that, it made a new lower close here. You see, we closed lower than the previous lowest low here. This is an indication the market continues to head lower, not a guarantee, but an indication, and that currently, seeing as which it's rallied all the way up into a 618 retracement. Now, granted, I did my 618 retracement all the way back up here. I think this was the most significant point. I was contemplating measuring my fib retracement tool to here, but I just didn't really feel like that was significant enough of a point to really justify getting short. And in all honesty, I decided to measure up here because honestly, when I saw this, I saw how high this thing had spiked, and I'm like, yeah, it's already almost about to get stopped out if I was to put my stop loss right above here anyways. I'm going to put it a little bit higher and kind of go from there and see if I can go ahead and get short that way. And sure enough, it did. It came all the way up high enough to get a 618 retracement in, and we'll just have to see how it goes. But I think there's a very good chance. There's not a lot of information or data here that indicates that there's nothing here that honestly is showing me that this intends to rally higher. So that doesn't mean it won't happen, but there's nothing that I'm seeing that is glaringly telling me that it intends to head a little higher. So we'll just have to wait and see. But ultimately, that's the EURCAD. Here we have the EURAUD. Now, there are a few things that when I look at this chart on the weekly chart, honestly, what I see is a bearish trend. We had our initial high here, our initial low, we had a new higher high indicating a reversal in trend or potential reversal. It was rejected, came down here, consolidated, came back up here, made another new higher high, but then rolled over and made a new lower low. Now, this was back in 2008, so this was a crash that made this new lower low. And now we're kind of retracing back up here, back up into all of this resistance level. I mean, look at this, guys. This is a massive amount of resistance right here. Massive amount. So, ultimately, I think that we are still very bearish. I think overall we'll continue lower long term over the next few years. And yeah, that's my opinion on it. But in reality, I don't know for sure if that's going to happen or not. I know that if the euro continues to have problems with maintaining the countries that are inside of it, that will probably cause the euro to potentially fall as well. So, that being said, guys, I think that there's a good chance that this could continue to roll over. We did have a break of structure down here. We made new lower, low, lower closes, and I think that ultimately there's a good chance we're going to continue to roll over and continue the bearish trend. That being said, though, I did measure all the way up here for my 618 retracement, and I may not have measured high enough. Honestly, there's a very good chance I measured too low, and that the market really is going to respect this level up here, and then the market's going to continue all the way up here, stop me out, and basically it's going to respect that and then roll over. That could totally happen. And if that does, I went ahead and put a yellow entry line here simply to mark that price level to let me know that, hey, if the market does go up there, I have a limit order, a limit sell order, or something around a short sell order, or something around those lines in order to go ahead and get short and hope that the market falls down here. So all in all, I would say that the market is looking like it might be bearish. Now, I will say there are a few indicators here that could cause you to have some concern. We did have a triple bottom here that is a bullish indicator, and clearly we have been going bullish ever since the triple bottom. We had an oversold condition, not a very big oversold condition, but we did have one back here. Again, we ended up rallying shortly thereafter. And all in all, let's see. We also down here, we had some support levels. If you look at the green line, we did have some support level here, significant support level. I mean, as you can see, the market has bounced off this area on a number of occasions. So clearly this is a very highly valued price level, but I don't know if, and there is some indication that this could be bullish, and that could end up stopping me out. So all in all, guys, we're just going to have to wait and see. I know I say that all the time, but that's basically trading. No one knows what's going to happen. No one can see into the future. So as a result of that, you kind of just have to do your analysis and cross your fingers and hope that your analysis is correct. No one's going to be 100% right, all the time. Hence the 100%. No one's ever going to be 100%. So all in all, no matter what strategy you have, you're going to lose. No strategy performs perfectly 100% of the time. The objective is to find a strategy that is right more often than it is wrong, and that you're not taking too much risk in performing those trades. But that's basically the idea. You want to find a strategy that's right more than it's wrong. However, there are strategies that can be wrong more than they're right and still be profitable. Because if you take such small amount of risks compared to the amount of profit that you tend to make, it's not out of the realm of possibility for you to win more often, for you to actually make money, despite the fact that your strategy is only 30% accurate. I know this right now because I'm testing a strategy that is consistently around high 20% to low 30% in terms of its accuracy, and yet on some currency pairs it is profitable. On other currency pairs, not so much. So far, I'm on my 4th currency pair that I'm backtesting, and it's looking like out of the 4, 2 are profitable, 2 are not. Whether that trend will continue, we'll just have to see. But yeah, once again, we'll just have to see. I know I say it all the time, but it's the truth. A lot of trading is sitting on your hands and waiting for confirmation, waiting for an answer to your analysis. So that being said, guys, there is a situation that's been going on in the British pound I wanted to talk about. I thought this was a very interesting set of circumstances here. Over the weekend, we had a couple of members from Boris Johnson's, which, by the way, is the new Prime Minister of Great Britain, and we've had a couple members of his administration that have been coming out and are basically displaying that they are very strongly in favor and committed to the idea of a hard exit for Great Britain around October 31st. For those of you guys who don't know, that's called Brexit. What Brexit is Great Britain exiting the European Union. There's a whole host of reasons for this, but the idea is that it's not beneficial for Great Britain to stay involved in the European Union anymore, and that it's more beneficial for them to leave and to ultimately acquire and maintain their sovereignty. Now, given the circumstances of what's really happening with the pound, I thought it would be a good idea to go into fundamental analysis and talk a little bit about the difference really between the two, and ultimately show why I feel that technical analysis is the superior form of analysis that we should be engaging in when we're building a trading strategy. That being said, I don't want it to come across like I don't like fundamental analysis, or that I hate it, or that I don't think anybody can be profitable with it. There are lots of people who are profitable with fundamental analysis, but when there's a lot of manipulation going on in the markets and a whole host of other things, fundamental analysis can be very, very, very difficult. Investors and traders can start to act very irrational and not really listen to the clues and the information that fundamental analysis is effectively telling them. For example, there are many companies out there today that are widely traded, and yet very few of them are very profitable. And this is a very serious situation. According to fundamental analysis, you would never go off and invest in a company that isn't profitable. But unfortunately, this is something that happens all too often today. So what is fundamental analysis exactly? Fundamental analysis is basically looking at news about sales, about new innovations and research and development projects that the companies are doing. It's about looking at the financials of the company and whether the company is profitable, what their liabilities are, what their debt looks like compared to their assets, and things of that nature. That is effectively fundamental analysis. And a lot of people like to pair that with technical analysis, which is not necessarily bad. My main argument about fundamental analysis is that when you have manipulated markets, the fundamental analysis starts to not really seem to weigh that heavily on the charts. And a lot of times what you will find is that the fundamental analysis will come out and will occur long before you'll ever be able to take action. And that's really my biggest criticism. It's not that fundamental analysis doesn't always have an effect on the charts. It does, but it's not always possible for everyday traders like you and me to come in the markets and basically find that information and trade before the information actually affects the market. Unfortunately, that information is going to come out a lot sooner, and the big firms, the big trading firms and investing firms are going to get involved and are going to move the market long before you and I would ever be able to do anything about it, which is why I don't really like fundamental analysis a whole lot. Technical analysis, on the other hand, is not really looking at fundamental data, news articles, or financial statements, but simply is looking at the charts and being able to see recognize patterns and being able to make decisions based off those patterns and try to predict the market movement purely by what we see on the charts. There's a lot of technical indicators that we can use, such as the relative strength index and a whole host of many others. But overall, technical analysis is just chart analysis. So the lesson that I really wanted to point out to you today was that had to do with the pound currency pair, was largely about how fundamental data doesn't always have the reaction that we think it does. So to kind of drive this point home about fundamental analysis and how the market doesn't really react to it always in the way that we would think, I decided to pull up the Apple chart, as you can see here. Now, what's really going on with Apple here? We are on April 24th of 2015, and effectively, Apple is sitting at around $130.28. Now, why I chose this date was it's a very significant date. This was the date that Apple was coming out with its brand new first generation Apple Watch. And a lot of people anticipated Apple making new higher highs and basically just absolutely exploding into new profit territories. That's mostly what people were thinking. You know, on top of that, we also had earnings reports, and unfortunately these dates are so far back, I actually can't see whether these earnings reports were in line with expectations or not. But as you can see here, we already made a new higher close, and we're looking like we're going to come up and make a brand new higher high. And a lot of people thought that they were. Now, when the Apple Watch came out, if we look at Wikipedia here, 4.2 million Apple Watches were sold in the second quarter of 2015. This is pretty significant overall when you consider that that's a massive number, a massive amount of money. However, when we actually look at what happened, despite the 4.2 million that were sold, the market basically had a retest of the highs. It got slightly rejected and is now going to continue to retest for a third time. Now, again, a lot of investors got long in this area. There was a lot of investors that really thought that the new Apple Watch sales was going to drive Apple to all new higher highs. Unfortunately, as we can see here, that is not what ended up happening. What ended up happening was that the market retested 3 times. If you draw your line down here, I guess you could say 4 times. And then the market ended up started to decline. And not decline by a little bit, but decline by a lot. So clearly, in this particular situation, the issue here was not the sales. There was another reason. There was other fundamental data that I guess was unknown to a lot of people that basically ended up driving Apple lower. It ended up spooking investors and getting investors upset enough to go off and sell Apple. I mean, even here, it looks like we're about to rebound, and we do rebound a little, but then we continue to go lower. Now, clearly, this is back in 2015. I already know what the price of Apple is, so I know that clearly Apple recovered from this, and this wasn't at all a situation where Apple, you know, went low and stayed low, right? But it is something to keep in mind. Even though you had the fundamental data that a new product was coming out, and that there was a lot of hype around this product and a lot of people were very excited about it, despite all of that happened, the market still sold off. We consolidated sideways, we retested 4 times, and we still sold off. And a lot of people are kind of wondering, well, what the heck? We had 4.2 million watches sold in the second quarter. That's a great thing. Why on earth would the market sell off when the market is doing good? Well, overall, there was other, and I don't really know particularly why. I didn't go back and actually do the research as to why the market ended up selling off, but there was definitely information out there that was real, that investors took as very negative, that ended up that overshadowed Apple's 4.2 million Apple Watch sales. So this is just one example of how fundamental analysis doesn't always work in the way that we think it does. Just because there's a new product coming out and the company is innovating and there's a lot of sales and the new product is very popular, you would think that the market would continue higher, but in reality that it doesn't always happen. Now, clearly, if we continue forward here, this is going too slow. Let's just skip to the end. Let's just skip to the end here. Okay, clearly, if we continue to go back, you know, that was the lowest low that we ever reached. with regards to this retracement, and we just continued higher. So we did, in fact, continue on, and we made new highs and everything else. But again, it's just one of those things that simply because there's positive fundamental information does not necessarily guarantee the market's going to spike, and doesn't guarantee that the market will react in a particular way. So I wanted to look at two other options that are really more talking about earnings reports than anything else, because there's a lot of people who like to get on the bandwagon with earnings reports, and they think earnings reports are, again, fundamental analysis, and you can utilize that to make a lot of money and see if there's a lot of spiking. But again, along with the same thing that happened in Apple, just because you have a positive earnings report like you had here in Netflix, their estimate was 79 cents a share, and yet they ended up achieving 85 cents a share, which was a surprise of 7.31%. And ultimately, what happened in the market? Let's watch. Basically, the market sold off. Now, why? We had positive earnings report. Not only was it positive, but it was above what analysts' expectations. Shouldn't this rise? Well, we actually ended up having a double top here on the edge of a bull, on the end of a bull market, or a bull, kind of a bullish trend. So clearly, this was not at all a situation. This is a reversal pattern. I mean, for those of you who know what a double top and double bottom is, this is basically a reversal pattern. Now, these are not always successful, and they don't always work, but clearly they did here, where the market broke the valley, the V here, sometimes the valley, and then came up and got rejected again and continued lower. This is a very interesting situation. Like I said, a lot of people wonder why this happened, because they say, hey, you had positive earnings. You even beat expectations. Shouldn't that mean that the market basically is going to continue higher? Well, in this case, it didn't. Now, as you can see here, we had more positive earnings, where, I mean, this one we beat by 30%, and this one we beat by 24%. So clearly we ended up having more positive earnings during the downtrend. I mean, again, here, this was another one where the market ended up literally beating earnings even by a greater amount than it did over here. And yet, for some reason, the market continued to decline. So clearly there was fundamental data, fundamental information that overshadowed the earnings reports. And for whatever reason, people didn't, investors and firms, they didn't care that the earnings reports were positive. They didn't care how positive they were. There was more information that they subjectively valued significantly higher than that of the earnings report. So this is, and that just happens a lot with earnings. So let's go ahead and look at the last one, Tesla here. Tesla is a really, really interesting example. Tesla is not a profitable company, unlike Netflix. Now, Netflix wasn't profitable for years and years. They are, however, profitable now. However, they don't have a very strong track record. Tesla has had a few, I think 1 year or a few quarters where they were profitable, but they have not been consistently profitable for long periods of time, unfortunately. And most of the time they're not profitable. But I wanted to kind of go over this other circumstance. It's very much in line with Netflix and Apple and all that kind of stuff. So here we have an earnings report where we ended up missing. The estimate from the analysts was negative 58 cents, and we actually ended up doing far worse than that at negative 78. Well, I say we, I mean Tesla did worse than that at negative 78. So you would think that by having that type of report, the market should decline. It should sell off. It's not profitable, right? Well, that's what you would think, but just watch what's going to happen here, because what ends up happening is not at all the case. The market does have a slight decline, but ends up rallying, and ends up rallying a lot. Again, and here, this is fundamental analysis right here, showing, again, here's another one. It was an unexpected surprise of 63%, but not in the positive like Netflix was, but very much in the negative. And the estimate was a negative $1.25, and they ended up losing $2.04 instead. This is another situation where you would think that the market would absolutely be falling. Now, and here's another earnings report here. Now, we were actually positive here, and we are seeing some positive rises. Well, We were positive in terms of the surprise by the market and by the analysts. We're still negative and we're still not profitable. But again, the market isn't really behaving. I mean, a long time ago, if you were negative like this, if your earnings per share was negative in this manner, it doesn't matter what the analysts were saying. Basically, you would be selling off. Nobody would be buying, and yet we still had a tiny little spike here, despite the negative earnings. Now, many of you guys probably know where Tesla is today. Tesla's at $241. And I just wanted to show this example here of what effectively happened, how we basically had negative earnings, and yet we still had a rise in the market. Now, as you can see here, we had positive earnings, we got a bit of a spike, but then we continued lower, probably because we continued to have, for even the positive earnings, I say positive, the estimate was positive. They didn't lose as badly as what the analysts predicted they would lose, but still unprofitable. And then we had even more unprofitableness, more so, and before you know it, I mean, the market has just been declining ever since. So things are not really looking good for Tesla, although right here, they actually had a positive earnings report of $1.75, which was absolutely amazing. And we had more positive earnings here. We're not in the negatives anymore, but we weren't as high as what they were anticipating. And then, unfortunately, we're back in the negatives yet again. And we'll probably be in the negatives here, too, and it will probably be worse than $1.12. Now, I'm not really going to give you guys my opinion as to whether or not I think Tesla's a great company or whatnot. That's not really what I'm trying to get at here. But I just wanted to show you guys how fundamental analysis in terms of the financial statements, in terms of the earnings reports, even in terms of market news, of future sales, is not always going to cause the market to react in the way that you think. And here's another situation. Here we're back on the pound pairs. We're back on pound CAD here. And due to the Brexit talks and all that kind of stuff that's going on in the British government, the pound ended up selling off, as you can very much see. Now, the pound has spiked a little bit, but not really a whole lot. I'm kind of thinking that the market will spike ever so slightly and then will continue to roll over. Now, if the market does spike up here, like it has in this particular situation, we could potentially go ahead and get short. Now, unfortunately, I didn't see this morning. I was busy taking my wife to the doctors, and unfortunately, I wasn't here to actually watch what was happening here. And when I got back, I got distracted with other content creation type of stuff that I was doing. But if we do get a third retest here, we will have a selling opportunity. And then the pound dollar, again, we had a massive spike low, a massive drop in the pound, and unfortunately we're going to have a little bit of spike here, but then probably a little bit of pop up, but then probably we're going to continue lower again. And the main point here, guys, is just this is a great lesson about fundamental analysis. Okay, fundamental analysis is very difficult to base any kind of trading strategy off of. I'm not trying to say it's impossible, okay? I don't want you to think it's impossible to do. There are people out there who are making millions off of their fundamental analysis strategies. There are tons of investment firms and trading firms that use fundamental analysis, and many of them use fundamental and technical analysis in order to determine where the market's going to go and try to attempt and make good market predictions. Unfortunately, this doesn't happen all the time, and a lot of times, if you are a really big firm, you can pay for services that'll give you a heads up on the news that's going to come out before it actually hits the market. And you can pay for a lot of services that can really help you. Unfortunately, everyday traders like you and me don't have that opportunity. So this is just a really great example of why I don't really like fundamental analysis. I prefer technical analysis. You know, technical analysis is not 100% perfect. You're not going to win all the time, 100% of the time, but fundamental analysis is even harder to try to predict market movement. Sometimes good news ends up having a sell-off in the market. Sometimes bad news ends up having a buying spree that ends up spiking the price of whatever you're looking at in the market. So just because a company is profitable or is unprofitable and has positive sales with regards to a new product or some kind of innovation they're doing doesn't necessarily mean the market will behave in the way that we initially think is going to happen. I know this for a fact because I have people in my life who attempted to trade based off earnings. They also attempted to trade based off new information of new products that a company was going to come out with, particularly Apple in this case. And the person I have in my life, who I love very much, they're a family member of mine, ended up losing a fair amount of money as a result of it. And it was a painful experience. And it's very difficult to determine where the market's going to go and how the market's going to react about fundamental analysis. And even if the market reacts in the way that one would expect, like here, yeah, I would expect the pound to sell off with all the Brexit talks and with Boris Johnson's administration basically coming out saying that they are committed to a hard Brexit, which is basically England exiting the European Union without a deal from the European Union, for those of you who don't know what that means. And I would expect the markets to sell off. There's a lot of people and a lot of companies that are benefiting off of Great Britain being in the European Union. So I would actually expect this to happen based off that fundamental information, but no one knew that that information was going to come out, and even if it did, nobody knew it was going to have such a profound effect. And on top of that, even if you did know that it was going to have a negative effect, you may not have known to what extent, and you probably wouldn't have been able to react in time to really get involved in any particular trade. Now, this does, much in the sense of the pound New Zealand here, this actually does give us a lot of opportunities here where we might be able to get short if the market does come back up into here. So it's something to keep in mind, even though, we don't always have to catch these big moves, but if you can read technical analysis, you may have been able to figure out that, hey, I knew the market was going to come up here and hit my 618 retracement. Actually, we did miss here, but let's pretend it actually got up and hit the 618 retracement. Well, I knew that, and I knew it's going to sell off. I don't know why it's going to happen, other than the fact that this is just the market has been trending, and this is technical analysis. This is very in line with the trend. So it gives you the ability to get involved in stuff before the news actually comes out and causes the movement in the market. But anyways, guys, that's my analysis for this week. I hope you guys enjoyed this episode. Ultimately, guys, knowing this stuff is what's going to help you become financially free. Understanding economics, and the right form of economics too. And I know there's going to be a lot of you who are going to be upset by this, and frankly, this is just who I am, and I subscribe to the Austrian School of Economics. That's the one I like. I'm a free market kind of guy, and I don't like other people telling me how to live my life, and I don't like a lot of the regulatory burden and all the things that come from other forms of economics and whatnot. And, ultimately, I feel that the Austrian School of Economics is by far the best one out there. And I mean, I'm an enthusiast of the study. I'm certainly not perfect in that sense, and I'm certainly no professor, but I know quite a bit about it, and I know quite a bit about economics as a result of it. And I feel that the Austrian School of Economics provides the greatest way of viewing the world. And there are a lot of people, a lot of you guys, you're going to come out, they're going to disagree with me and things of this nature. That's fine. It's just my personal opinion. And ultimately, I think, guys, that by understanding economics, by understanding trading, investing, by understanding all of this stuff, we can basically become financially free. We don't have to have a job. We don't have to be employed by anybody anymore. We can create our own businesses. We can live on our own terms and live the life that we want to live. Guys, this right here, this is the most important aspect. This is why I do this. I want to show you my journey, to show you that it's possible, because I believe I'll get there. I believe one day I will actually be there where I will legitimately be financially free, employed by myself. And my idea is, once you guys see me become financially free, you guys are starting this journey with me right from ground zero. All right? I am not making 1 red cent on the internet right now. I have a website, costing me money, not making me a dime. I have social media accounts. I got a Facebook account. I got a Pinterest. I'll be on iTunes or Apple Podcasts. I'll be all over the place. And guess what? None of it is making me any money. It's a lot of investment of money and energy and time that I am putting into it. And guys, ultimately, you need to try to become financially free. You need to go out there. You need to find something you love, some kind of passion of yours. If it's trading, great. Come here and join me on my journey to become a consistently profitable trader. You'll get to see everything. You'll get to see the truth. I make the promise that I will be 100% transparent. I will tell you guys everything, and you guys will get to see quite literally everything that I'm going through, all the ups and the downs and how stressful it is, but also all the benefits and how rewarding it can be as well. And guys, my goal is to show you guys that stuff, to show you guys my journey, to inspire you, to motivate you to go out there and make the life that you were meant to live. Don't settle for mediocrity. And if you're like me and you were never happy with working for somebody else, you hated taking orders from somebody, you hated making that person rich instead of yourself, then join me on my journey. Become financially free with me and become a consistently profitable trader. If you're interested in trading, become a consistently profitable trader with me. If you're not interested in trading, guys, we got a lot of other things we're going to be covering here on this channel, on the website. Anything from trading, investing, entrepreneurship, personal finances, and economics. We got a lot of stuff, guys. If all of that sounds great to you, then hey, like the video, subscribe to the channel, check out all the other sources I've got, and check out the website at newmillenniumwealth.com. See what you think. If you like it, send me a comment. Subscribe to my newsletter on my website. Follow my stuff if you love it. And if you don't, that's okay. Thanks for showing up. Thanks for giving me the time of day. I appreciate it. Your time is valuable in your day, and I appreciate you, spending some of that time checking my stuff out. But if you love it, guys, go check out the stuff. Share the YouTube channel, share the website, and help me grow this community that wants to all come together and become financially free, achieve financial freedom together. So if you do that for me, guys, I'll see you guys in the next video. Remember, know the risks, plan accordingly, and have a great day.